Two people receive $10,000 windfalls on the same day. Tax returns, insurance settlement, inheritance, whatever. One invests it in index funds expecting 10% annual returns. The other invests it in skills training that increases their earning power by $20,000 annually. 10 years later, the first person has $25,900 from compounding. The second person has earned an additional $200,000 and continues earning more every year. The difference is understanding that the highest return investment is not stocks, real estate, or cryptocurrency. The highest return investment is yourself. Your skills, knowledge, and capabilities compound faster than any financial asset. Today, you will discover exactly why the wealthiest people on Earth prioritize self-investment over every other investment category, and how this single shift creates exponential income growth that no market return can match. The asset you are is worth more than any asset you own. Welcome back to Finance Insight in High Def, where we give insight to proven financial principles and how we can use them to improve our daily lives and build towards a better financial future. If you are new here, consider a like and subscribe as we dive into the 8 principles on why the asset you are is worth more than any asset you own. Let's jump right in. The return that compounds forever. The first principle is understanding the mathematics of self-investment. A skill that increases your income by $10,000 annually delivers a 100% return on a $10,000 investment in year 1. Unlike financial investments, this return continues every year for decades. If you invest $10,000 in stocks at 10% annually, you have $25,900 after 10 years. If you invest $10,000 in learning a skill that increases your income by $10,000 annually, you earn an additional $100,000 over 10 years. That same skill might generate an additional $500,000 over 30 years. The return is 5,000%. No financial asset can compete. Someone earning $60,000 who invests $5,000 in a coding bootcamp lands a developer job paying $90,000. That $5,000 generated a $30,000 annual raise. Another person invests $3,000 in sales skills. Their income increases from $50,000 to $80,000. Over a career, that could generate over $1 million in additional income. The skills that multiply income. The second principle identifies which skills deliver the highest returns. Not all learning is equally valuable. Some skills create marginal improvements, while others multiply income exponentially. High-income skills include sales, copywriting, public speaking, digital marketing, coding, data analysis, and leadership. These skills are universally valuable across industries and translate directly into higher compensation. Warren Buffett credits his success partly to taking a Dale Carnegie public speaking course in his 20s. He paid $100 for the course in 1952. That investment in communication skills helped him raise capital, influence investors, and build Berkshire Hathaway. The return on that $100 is now $150 billion. Oprah Winfrey invested relentlessly in communication and interviewing skills. Her ability to connect with audiences transformed her from a local news anchor earning $15,000 to a media mogul worth $2.5 billion. Mark Cuban taught himself programming in the 1980s. That self-taught skill led to founding Micro Solutions, which he sold for $6 million. He reinvested profits into Broadcast.com, which sold to Yahoo for $5.7 billion. High-income skills are not taught in traditional education. They are learned through deliberate practice, courses, mentorship, and real-world application. Investing $10,000 in learning copywriting could increase freelance income from $40,000 to $100,000 annually. The knowledge that creates opportunities. The third principle shows why continuous learning opens doors that remain closed to others. Knowledge creates opportunities that generate wealth beyond just higher salaries. Bill Gates spent his childhood reading. His knowledge of programming and technology positioned him to recognize the opportunity in personal computing. That created Microsoft, worth over $3 trillion. Elon Musk taught himself rocket science by reading textbooks. That knowledge enabled him to found SpaceX, now valued at $180 billion. Jeff Bezos studied computer science and finance, building knowledge of technology and capital markets. That combination enabled him to build Amazon, worth over $1.5 trillion. Knowledge is pattern recognition. The more you know, the faster you identify opportunities. Investing $2,000 in learning real estate analysis could lead to recognizing a property deal that generates $100,000 in equity. The network that multiplies value. The fourth principle reveals that investing in relationships delivers returns as significant as investing in skills. Your network is your net worth. The right connections open opportunities, partnerships, and deals impossible to access otherwise. Warren Buffett studied under Benjamin Graham, learning value investing principles that built his fortune. He paid tuition to Columbia Business School specifically to learn from Graham. That relationship investment was priceless. Mark Zuckerberg invested time building relationships with early Facebook investors, including Peter Thiel. Thiel's $500,000 investment and mentorship were critical to Facebook's early growth. Oprah Winfrey invested in relationships with influential figures in media and entertainment. Those relationships created opportunities for partnerships and deals that multiplied her wealth exponentially. Consider someone who invests $5,000 attending an industry conference. They meet a potential business partner. Together, they launch a company that generates $500,000 annually in profit. The conference investment delivered a 10,000% return and continues paying dividends indefinitely. The health that preserves wealth. The fifth principle addresses health. Physical and mental health are foundational to sustaining high performance and enjoying wealth. Neglecting health destroys wealth faster than any bad investment. Warren Buffett prioritizes mental health through consistent routines, reading, and avoiding stress. At 95, he remains sharp and active. This longevity has allowed decades of additional compounding. A heart attack at 50 could end a career earning $200,000 annually. Over 20 years, that is $4 million in lost income. Investing $10,000 annually in preventive health delivers a 400% return through income preservation alone. Mental health investments improve decision-making, focus, and resilience. Physical fitness increases energy, extending productive hours daily. The credentials that open doors. The sixth principle examines when formal education and credentials deliver strong returns. Not all education is created equal. Some degrees multiply income exponentially while others generate minimal returns. A medical degree costing $300,000 enables a career earning $300,000 to $500,000 annually. Over 30 years, that degree generates $9 million to $15 million in income. An MBA from a top program costing $200,000 can increase earning potential by $100,000 annually or more. Over a career, that is $3 million in additional income. But a degree in a low-demand field costing $150,000 with starting salaries of $35,000 annually is a poor investment. The degree does not generate returns exceeding the cost. The calculation is ruthless. Does the credential increase earning potential enough to justify the cost? Bill Gates and Mark Zuckerberg both dropped out of college because their opportunities exceeded what formal education could provide. The continuous learning that never stops. The seventh principle emphasizes that self-investment is not a one-time event. It is a continuous practice. The wealthy read daily, attend seminars regularly, and hire coaches consistently. Warren Buffett reads 500 pages daily. Bill Gates reads 50 books annually. Mark Zuckerberg commits to reading one book every 2 weeks. These are obsessive learners who invest hours daily in knowledge acquisition. Many successful people follow the 5-hour rule, dedicating 1 hour daily to deliberate learning. Over a year, that is 365 hours of focused learning. Over a decade, 3,650 hours. Investing in continuous learning means buying books, enrolling in online courses, attending workshops, and hiring coaches. A $50 book delivering one insight that increases income by $5,000 returns 10,000%. The wealthy allocate budgets specifically for learning. They might spend $10,000 annually on books, courses, seminars, and coaching. That $10,000 invested in learning compounds into income increases, far exceeding any market return. The compounding effect of self-investment. The final principle ties everything together. Self-investment compounds faster than any other investment because it affects every future decision and opportunity. A skill learned today improves outcomes for decades. Consider someone who invests $20,000 in developing high-income skills over 5 years. Those skills increase their income from $60,000 to $120,000. The additional $60,000 annually compounds if invested. Over 30 years, at 10% returns, that additional income invested becomes $10.8 million. The initial $20,000 self-investment created $10.8 million in wealth. The return is 54,000%. No stock, real estate, or business investment offers guaranteed returns anywhere near this level. Your earning power is your greatest asset. Increasing that earning power through skills, knowledge, network, health, and credentials multiplies wealth exponentially. Every other investment depends on having capital to invest. Self-investment creates the capital. Warren Buffett summarized this perfectly. the best investment you can make is in yourself. The more you learn, the more you will earn. He became the world's greatest investor by investing in himself first. The person who invested $10,000 in index funds earned $25,900 after 10 years. The person who invested $10,000 in themselves earned $200,000 and counting. Both started with the same capital. One understood that the highest return asset is not something you buy, it is something you become. If this explanation of why investing in yourself delivers returns no financial asset can match has given you insight on where to allocate resources, share this with anyone who needs to understand that the wealth you build starts with the person you become. Hit the like button and subscribe for more insights that separate those who invest in assets from those who become the asset, the wealthy from the stagnant, and the compounders from the consumers. Now, once you have invested in yourself and have become a high earner, be sure to check out our video, Lifestyle Inflation, the #1 silent wealth killer for high-income earners. See you in the next one.